Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to our markets wrap. We didn't have any action last night on Wall Street because of a holiday, so we turned to Europe for leads. And that's where we saw European bonds slipping and shares in defense companies rallying. And that's on the likelihood of greater military spending, which could force governments to step up borrowing in the coming years. So the Pan-European Stocks 600 index ended the session higher by 0.5%, bouncing back from a slight decline last Friday. And it now marks another all-time closing high of 555 points. And the index was lifted by a 4.2% gain in the Stocks 600 Aerospace and Defense Index. So for more insights on how to navigate the markets, we've got Rick Bensignor. He is the president for InTheKnowTrader.com. Rick, welcome to the show. How are you doing today?
Good, Ryan. How are you?
I'm doing great, Rick. Now let's talk about where we are when it comes to markets. And last week was actually a pretty good one for Wall Street, where we had a major indexes in the green. The S&P 500 for the week up 1.5%, the Dow up 0.6%, and the NASDAQ higher by 2.6%. What are your takeaways on that front? Where is the directional bias right now?
So from a pure momentum perspective, the market bias is bullish, and although we've had probably half a dozen highs in between Spider 605 and 610 since early December, all the major lows have been higher lows going back to August 5th. So you have an ascending triangle. I think we're likely going to resolve that this week because you've got conflicting type push and pull on the market right now. The second half of February is historically the worst 2 weeks of the year. That would be bearish. Yet, as I look now, S&P futures are actually up about 14 points, even though the S&P is closed today. Futures are up. And if we push above 610, we're really on all-time highs. We could easily get to, I'd say, the low 630s would kind of be the next target. And yet on the downside, if this seasonal pattern ends up playing out, and let's say tomorrow in New York, we open higher and then close lower, you may very well see some new sellers show up, another failure in and around that 609, 610 level, and maybe we get the decline. So it's a tough call. The momentum is towards the upside, clearly. But you've got some reasons why this may not actually continue higher.
Let's talk about those reasons. And of course, inflation is one of the biggest moving parts in this outlook. Where are we right now when it comes to expectations?
Expectations on earnings?
On inflation, the outlook for inflation with all the policies we're seeing.
Look, the institutional investors are positioned for inflation to be an ongoing issue in the U.S. On the top page of my institutional report that I send out each week to some of the biggest clients in the world, I've got a table, and the table shows that for 56 consecutive weeks, institutional players are positioned for an inflationary environment. Now, the Fed's trying to get the U.S. inflation down to 2%. They're failing to do that at this point. They certainly have brought inflation well down from where it was a year and 2 years ago, but I think perhaps they're unrealistic in that 2% bogey. I think 2.5% to 3% is probably a far more reasonable one that they could more successfully achieve. But inflation is here to stay, and I think that's an ongoing issue in general.
Yeah, so you have inflation as a potential headwind, which might suggest the Fed could stay higher for longer. And you also have the inflationary policies potentially putting pressure on margins as well. So there are seemingly a few headwinds for markets to push up higher. Is that right? The right way to look at it, Rick?
Yeah, I think so. Look, some of the things that President Trump is doing, including the tariffs, are inflationary. I know that there was a little banter before we got on today, potentially talking about, are there any issues in the U.S. markets related to the fact that President Trump is going to stop production of the copper penny? Does that have any bearing on the markets? And generally, I'd say no. That choice is just a kind of a money-saving one. But what the government probably doesn't think about is something that I'm actually an expert in, and that's behavioral finance theory. And if you walk into the store and you think about all those items that are priced at some dollar 0.99, that would essentially have to go away. And either stores and retailers and people who sell product are going to have to round up by the penny to make it the next, whole dollar, or they have to lose 4 cents potential profit and lower it down to 95 cents. And in my opinion, the smarter thing to do is actually lower it to 4 cents, take the hit on the 4 cents, because when you round up that, the whole reason things are priced at, $22.89 is because when you see 23, it changes, the mind looks at that very differently than $22.99. And I suspect that sales will actually be more negatively impacted if retailers choose to go up the penny than fall the 4 cents down to 0.95. That's the only way I see that his decision potentially has some real impact.
That's a very interesting scenario and the dynamics to watch out for. That psychological barrier when it comes to the, I suppose, dollar level, the 99-cent level, where it might play out. All right, taking a look at what else is attracting investors. We've got gold prices push up to all-time highs in recent weeks. Where does it go from here, Rick?
So I think gold probably has a little bit more to this run. I think we hit anywhere from $3,000 to about $3,030 is where I'd be taking some money off the table. And so, futures in the U.S. are 29.11, and that's at least as far as Friday's close. I'm not sure if I have a price for, basically 18. Yeah, I actually do have a price for today. So you've got roughly another $100 or so. What's that? 3%, give or take, something in that neighborhoods of upside. And then I think this pulls back again.
All right. Gold prices now at around 2,900. Year to date, up 10%. Year on year, some 40% gains. And another place you're tracking very closely is crypto. And that's where we've got Bitcoin prices up 85% on the year. And year to date, some 3%. Is this a sign that perhaps the momentum is fading?
Well, look, Bitcoin has gone nowhere for a few months. It's in a trading range from about $90,000 to its all-time high, just shy of $110,000. It's been back and forth across it a few times. And it's kind of feeling like that if this breaks 90, it could quickly get towards 80-ish, where there is some decent support, and it may just be a flush out. But right now, I'd say that bulls need to see a catalyst to the upside in order for this to get above the current all-time highs. And then the next target is something in the upper 120,000. So about another, let's call it $20,000 above what the current high is would be the next measured target to the upside.
All right, Bitcoin prices now trading around $96,000. We've been in conversation with Rick Bensignor. He is the president for InTheKnowTrader.com. Rick, always a pleasure having you on the show. Thank you so much for your time and insights.
Thanks, Ryan. Have a good one.
Catch up again soon, Rick. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.